Central bank digital currencies present the biggest risk today to financial freedom and to economic stability. And the problem is they are already here. This is not some far off distant future that we need to be worried about. This is something governments all around the world have already started rolling out today. Obviously, we've got the ECNY in China, but the United Arab Emirates just announced their digital dirham strategy. The Swiss National Bank has already conducted experiments with its own CBDC. The Australia and New Zealand banking group has completed its pilot program for its CBDC. The Bahamas has been running an experiment with its sand dollar for a few years now. The ECB is planning the launch of its digital euro, and the Bank of England the launch of the digital pound. And in case you're sitting there thinking, man, I'm glad I don't live in one of these countries, guess again, because the Federal Reserve in April of 2023 just launched the beginning of the Fed Now program, which is the rails of the upcoming US CBDC. The Federal Reserve's Fed Now service has a launch date of July, but starting the first week of April, it has already begun bringing adopters on board for testing and certification. Central bank digital currencies have already started to arrive. First, I'd like to tell you about today's sponsor, I Trust Capital. Today, people are concerned about the purchasing power of their dollars being eroded due to inflation. They're concerned about the returns they're getting on their traditional portfolios, things like stocks and bonds. Many people want to be able to purchase investments that will preserve their purchasing power, things like gold, silver, Bitcoin, ways to store the value of your money without being exposed to the dollar. What's the problem with this? The problem is that most people have most of their wealth in their 401ks, their employer's retirement accounts. And these accounts do not allow people to buy gold, silver, or Bitcoin. Some of them allow access to ETFs that have exposure to these prices. But number one, you're introducing many layers of counterparty risk. And number two, you don't actually own the asset itself. That's where I Trust Capital comes in. I Trust Capital allows you to open up actual retirement accounts, IRAs, traditional and Roth. You can even roll over funds from a previous employer's retirement account to fund this. You can buy gold, you can buy silver, you can buy Bitcoin and even other cryptocurrencies with I Trust Capital. And if you sign up with my link in the description below, you'll get $100 worth of Bitcoin as a sign-up bonus for opening the account. How did we get here? What is the historical momentum that is causing governments to move forward with this, despite the fact that it seems like pretty much every population on Earth would say no to this? And given that collision course between governments pushing forward with this anyway, and populations in normal situations likely to just reject it, what is the most likely outcome? As with most large events that happen, things don't happen in isolation. Momentum from the past carries forward and causes things to happen. One ancient proverb says, "Do not despise the day of small beginnings. A small seed can grow into a large forest. A small investment can compound into a large fortune." And government's push for a CBDC didn't start yesterday. The momentum behind it started all the way back when people used gold and silver coins. During the first few hundred years of the Roman Empire, their coins contained 4.5 grams of pure silver. But over the course of time, the Roman emperors and the Roman government could not stop itself from diluting the precious metal content in its coins. Typically what they would do is they would say, hey, those coins in circulation, they're being counterfeited. You have fraudulent coins in there. So everybody has to turn in your old coins. We will mint new coins with a new stamp on it and give them back. So you give us 10 coins, we'll give you 10 coins in return. What they didn't tell people though was, hey, it's not going to have the same amount of gold or silver as your last coin. This allowed the government to confiscate gold or silver from its citizens and leave itself with more purchasing power than it had before. But this process could only go so far, and so governments invented a new way of stealing more purchasing power from its citizenry through fractional reserve banking and centralized gold storage. In 1913, the Federal Reserve Act was passed, which launched the central bank in the United States. And then in 1934, the Gold Reserve Act was passed, which prohibited the ownership of gold in the United States and made dollars irredeemable for gold. This allowed the United States to print as many dollar bills as necessary and never have to worry about a local run on the bank where people went to turn in their bills for gold. This allowed the government to spend a lot more than it would have previously if people could turn in their money for gold. Coincidentally, this solved two problems. Number one, it solved the problem of bank runs because people couldn't go and get their gold from the bank anymore. Number two, this solved the problem of government purchasing power because it allowed the government to have a lot more wiggle room with how much money it spent. But they still had the little problem of the fact that those dollars were still redeemable for gold for other nations. And so fast forward 30 years, you get to 1971, and you had one last big run on the bank where all the nations around the world turned in their dollars to get gold. And in 1971, there wasn't enough gold to meet all those dollar redemptions. And so they closed the gold window, and the last remnant of the gold standard ended forever. Then we entered the stage of fiat currency, where governments had no limit, no restraint, no anchor on how much money they printed other than political will. And that political will has many times caused countries to overprint into hyperinflation. But here's the problem. We still have a debt-based monetary system that has fragments and layers and regulations and laws left over from when gold still anchored the system, which means for governments to be able to spend money by printing money, really what they have to do first is borrow it. This has left governments around the world with massive sovereign debt issues, huge debt to GDP ratios, and a tax base that they've already taxed out so that they're in this position right now where they want to spend more money, but they can't tax or borrow their way into that. We also have this little issue right now of the fact that financial institutions are the base layer of this system and have lent all the money to these governments at record low interest rates over the last couple of years. Over the last decade or so, with treasury rates at the lowest they've ever been in history, financial institutions loaded up on this cheap debt. And now that rates have increased, government borrowing costs have skyrocketed and bank balance sheets have collapsed. So just as before, we have two issues: bank failures and government spending. And this is exactly where the central bank digital currency will come in. But many say, hey, wait a second, we already have digital money and we already have a Federal Reserve that can print, $1 trillion, $2 trillion overnight. So how would a central bank digital currency make any difference to any of this? First, we have to understand what a ledger is. Every bank today operates off of a ledger. Just imagine a list, an Excel spreadsheet that has all the different account numbers and how much money is in each of those accounts, and then all the transactions that took place in those accounts. That's exactly how your bank operates all of its accounts. It just has a list with all the money and all the transactions. And then when you spend money, and money goes from your account to the grocery store's bank account at a different bank, then your bank will send money over to that bank, and they will both reconcile their own ledgers. Bitcoin is an example of a decentralized ledger that is public. And so anybody can go in and look at all of the accounts, the Bitcoin accounts called wallets, and see what Bitcoin is in each of those accounts, and then see all the transactions that led to those amounts being in those accounts. Bank ledgers are examples of private ledgers. And so the banks maintain their own control over their own ledgers, and nobody else can see them but the bank. It's worth noting that the banks have control over their ledgers. So if they want to stop a transaction from taking place, they can. Have you ever tried to wire money or send a transaction and a little notification pops up and says, hey, we need further verification before this transaction goes through? And you have to speak to your bank and they make sure that it's not fraud, or they ask you what the purpose is of the transaction. And so banks maintain control over their own ledgers. They can reverse transactions, they can stop transactions, or they can cause transactions to happen. This is why the European Central Bank is being so adamant about saying that the digital euro will not be programmable. And the same rhetoric is coming out of the Bank of England saying the digital pound will not be programmable either. But guess what? The Patriot Act wasn't supposed to be used against US citizens who were not participating in any crimes either. But the power to be able to do something is the problem itself. It's not the fact that you give us a guarantee or a promise that you won't use it that way. It's that you have the capability should you ever change your mind. And just as your bank can stop or cause or reverse a transaction from taking place today, a central bank digital currency puts all that power under one roof, the central bank, the Federal Reserve in the United States. So instead of deposits being held with a bunch of different banks, and then banks having to reconcile and batch transactions and settle over months or quarters with each other, instead all transactions just take place underneath the one banner, the one ledger at the central bank. So you and every business out there has to have an account with the one bank, the central bank, and anytime a transaction takes place, the central bank just moves the money from your account to somebody else's account. Instant and full control. This means the risk of exercising too much control over the money system goes through the roof, because right now the Federal Reserve has two mandates by Congress: full employment and stable prices. So they try and accomplish these goals with monetary policy like raising and lowering interest rates and buying and selling assets. But a central bank digital currency would allow them to get rid of those sledgehammer tools and use a more scalpel-like approach to trying to control and fine-tune the economy. If they see inflation rising up, instead of having to raise interest rates on all debt, all they have to do is institute higher prices or a real-time tax on any area that is getting too expensive. Or instead of that, they can even just institute real-time rations. And so if gas prices are shooting up and they say it's because you're hoarding gas, just like people used to hoard toilet paper, then they will say, okay, you know what? We're gonna say you can't spend more than $400 this month on gas. And if there are prices of something that are collapsing and they see, oh, this poses systemic risk, then they could limit transactions of sales of those items to stop those sales from causing the prices to fall. Now, we know the amount of malinvestment and misallocation of resources that are caused when the Federal Reserve uses a sledgehammer approach to raising interest rates, lowering interest rates, buying and selling assets at a large scale. It changes the signals that prices send to economic actors about value, and it causes errors to be made in economic calculations. You can only imagine how much worse things will be when an unelected group of bureaucrats who have never worked a real job in their lives get to decide the price or the value of every single item in existence and try and fine-tune the economy by controlling the rise and fall of prices of everything, just by controlling the money. Now, on top of this, there are privacy concerns, right? Because you have your account at your bank and your bank knows your name, your birthday, your entire financial history, your social security number, everything about you, again, for anti-money laundering and KYC laws and the Patriot Act and everything the government enforces on them. This would only increase with a central bank digital currency because they would need to make sure that you don't have two accounts with them. They need to make sure that every individual is accounted for. But obviously this poses security risks, like what if they're not that good at protecting against cyber attacks and somebody is able to hack in and see all the information about everybody or cause a transaction to happen that they didn't actually want to happen and steal money. This is why the former chair of the CFTC said that a privacy protecting US CBDC could take over the world. But unfortunately, you actually can't have a CBDC that doesn't have all the information about everybody. So we know the concerns. Why in the world would anybody ever use this and sign up for this? How does this play out? Clearly, populations don't want this. Even in China, they're having to give away large bonuses to try and increase adoption. And even in Nigeria, which has a very pro-crypto population, the adoption of the e-Naira is extremely low. But that's because these governments have done it the wrong way. You have to announce it as the solution to a crisis. We have two crises unfolding right now. We've got the bank failure crisis and we have the sovereign debt crisis. We are continuing to see more and more stress on small and regional banks. If and when we see more failures, we will definitely see a population that is very angry at banks that took too much risk with their money, risked them not being able to get their deposits back. Meanwhile, the people running the bank were getting rich. We'll see regulations proposed by politicians trying to capitalize on this that will stop banks from being able to profit. And the only way you can do this is to eliminate deposits from banking. Right now, for banks to be able to be in existence, to get a deposit and to hold it for you, they have to make money somehow. So they take your money and they loan it out to somebody else, which means there is the risk now that they won't be able to pay you back the money that they owe you. But a central bank digital currency would eliminate this problem, because if all accounts, all money is held at the central bank that can print its own money for its own expenses, there is no loaning out of those deposits. Those deposits are just there. It's a number written on a spreadsheet. It also eliminates the problem with bank executives and shareholders getting rich off of taking risks with your money. This would be a nationalization and a centralization of banking in the United States, and it would eliminate the need, and it would crush banks. They would likely just be folded in as infrastructure for the central bank. But this actually increases the other problem, which is the sovereign debt crisis, because those deposits are used to create loans out of thin air to loan to the government, and the government is already at a place right now where borrowing costs are higher than they've been in over a decade. And if they lose their main source, financial institutions who are lending money to them, where are they going to get the spending power? And so we'll see a full transition here to modern monetary theory, inflationary financing, where the central bank will just create money out of thin air and credit it to the government's account. Instead of having to go through the loopholes of borrowing money that's been loaned into existence off of a multiple of deposits, we don't have to do any of that and then worry about the interest costs. No, if the government needs money to spend, they tell the central bank to print it for them. Now, to be perfectly honest, there are a lot of legal fences that are in between where we are today and that apocalyptic future that I just described. But all you need is a big enough crisis with a population that is mad enough about the status quo, and governments, Congress will get right on it to amend the Federal Reserve Act, to fold the Federal Reserve underneath the Treasury, to implement new regulations on what banks can and cannot do, especially if it means that the government will have more spending power and more control. And so in the wake of the next couple of quarters, as we see unemployment, maybe more bank failures, we see economic pain, we see debt defaults rolling throughout the system, this is the perfect catalyst for a central bank digital currency to be proposed as the solution. You want your social security check? You've got to sign up for a CBDC. You want your stimulus check? You've got to sign up for a CBDC. You want your tax holidays so that we boost the economy and let corporations survive a little bit longer? You've got to sign up for a CBDC. And make no mistake, the early adopters for the Federal Reserve's infrastructure for a CBDC, FedNow, are government agencies. And so payments going in between different parts of the government will start to be using FedNow. Again, these are the rails. This is the infrastructure for a CBDC. So it's only a matter of time before this starts getting rolled out. It'll be the solution for slow payments, for an inefficient IRS, for terrorism, or money laundering, or counterfeiting paper money. And it will also be the solution for whatever economic crisis comes next, that people are more willing to say, I'll give up some freedom for this security. And in the words of Benjamin Franklin, the person who gives up a little bit of freedom to gain a little bit of security deserves neither and will lose both. As always, really appreciate you guys. Thank you so much for watching. Have a great day.